Please take your seats. I would be grateful if everybody can sit down. Kindly sit down. Our last session is African Impact, and it's taking the process, or it's taking the procedure, or I would like to say maybe the format of a debate style. But I kindly need you all to take your seats, or I'm going to come to you, and I'm going to put the microphone. All right. Please take your seats, please. Take your seats. I know that a lot of people are beginning to want to go into the other rooms for the meet and greet, etc. That's coming up shortly. But for now, we are finishing and we're coming to our last session. So please, with your attention and taking your seats, I would be most grateful. Those of you taking selfies, thank you so much. The room will get full again. I know that a lot of people have also gone to check out the displays, etc., but we're going to finish strong. All right, coming to our last part, we call this African Impact. And the sessions that are coming up are designed as debates between two great minds at any given point in time, sharing their experience, sharing their thoughts, but battling out where they stand. They don't always have to agree. And that's because everyone has their experience. Everyone has their insight. Everyone has the explanation for their kind of innovation, if you may put it that way. So ladies and gentlemen, hello, Renee Parker. Allow me to bring to the podium our two first debaters. First, the one who has promised me $100 million in investment in the film industry. Hassan, do not laugh that loud. Please welcome Hassan Haida, founder and managing partner at Plus Ventures, a venture capital firm. As an investor himself, Hassan will be sharing the investor's perspective in today's discussion. Please stand where you believe you'll win the argument. Fantastic. My next debater is the Chief Executive Officer at Drugstock, who is also a 2019 ABH Top 10 hero. Chibuzo is an entrepreneur like many of us in this room right now, and he has successfully raised investment. He'll be sharing with us his perspectives on entrepreneurs when raising finance. Now, the debate topic, Chibuzo, please, with a round of applause, resounding one. A money man, eh? All right, so entrepreneur versus investor, exploring the tension points. Gentlemen, as I flip through my cards, just tell us exactly how you feel. Hassan? Chibuzo?
Great.
Hassan, one more time.
Oh, he said great. I said good the first time, so even better than him.
I was checking your mic. Relax. The debate hasn't started yet. I'm going to go through 3 tension points, gentlemen, and we'll go straight to it. Let me start off with you, Hassan. Should entrepreneurs aim for visionary valuation? I mean, you're talking about Uber, who was valued in the billions despite not even being profitable at that time, versus the realistic today-based valuation. What are the pros and cons, Hassan?
So I think definitely founders need to be a little grounded in reality. I think they're not because they're founders. Like by the base, they're not grounded in reality at all. They're trying to create something new, but valuation should be grounded in reality. I think if you try and pretend that you're an Uber when you're just getting started, you're not going to be able to raise any money, probably. And so understanding the market that you're raising under, understanding exactly what it is you can and can't do in the fundraising environment, you should probably be realistic and not try to aim for the sky in your first funding rounds.
Chibuzo?
Thank you. I think with the purpose of valuations is not just about money. I think the purpose of valuation is about setting direction. It's about setting your goals, setting your scope and your objectives. And I think that being visionary aligns you to investors who can take you there, bring in employees who would have worked at Google, but because of your visionary direction and valuation, they would want to work with you. And I think that aligns people around big goals. It is important to tie those goals to achievable metrics, but whenever has pragmatism solved problems in the world?
Quite often, actually. So I think that there's a disconnect between what valuation means and at the early stages versus at the late stages, right? Uber was valued at billions of dollars, but at a later stage. At its first round was valued at less than $5 million. So it's just about where you are on the journey is what the valuation sort of makes sense. And at the early stages, I think really a lot of founders come to us and they're like, we've got nothing, but I got a great idea. Please give me a valuation of $20, $30 million. And that's not really a very easy ask. And it's not something that as VCs, it makes a lot of sense for us because at the end of the day, my business is to make money by investing in your business. And if your business is overvalued, then it's much harder for me to really generate any kind of a return. There are VCs that don't see it that way, but that's not my approach. I think a lot of what we saw in 2021 and 2022 was, I guess, an overextension of the world imagining what it's going to look like in the future versus what it actually is going to look like in the future. And I think we've seen a lot of people fall very hard from those high valuations to down to earth really now, or even in the earth with some companies.
I'm happy that Hassan agreed with me about visionary valuation at some point in the company's journey, because I think it's important to have that goal, be ambitious. And the point with creating that space, sometimes you need to potentiate it by having that big Uber drive to get there.
You know, hang on a second, Hassan, you want to fight, relax. But this is a debate, so, he's itching, his knee is shaking. Hassan, go ahead, answer it.
At what? No, I'm good, it's fine, he's right.
No, but Chibuzo, I mean, I'm looking at, you haven't been able to evaluate drug stock, and a lot of investors have come your way. You've gone to a lot of investors. It hasn't been easy. You've heard quite a lot of no's, and probably these investors have looked at you today and said, oh my goodness, we should have paid attention to him at the time. But how did you address this challenge? And how did you change your approach to valuation negotiations?
So the truth of the matter is that usually, there's usually give and take on both sides, and contrary to what it would look like in the debate, it's usually not going head to head all the time. It's usually a process of discussing through. I remember one of our first investors, he told us to take our valuation down, and for us at the time, I mean, we didn't even understand the whole concept, right? Luckily, we met another investor who was like, no, take it up, because that would take you to the next runway. And they are both on the cap table now. So it was a very interesting conversation for me and learning experience. However, one thing that is consistent is that you should be very focused on what the broad scope can be, but also know what today's journey looks like, but also be quite ambitious.
Okay, now I'm going to move you two gentlemen to my next topic, which is profit maximization versus social impact. So traditional investment tends to heavily focus on, financial returns. Obviously, everybody wants to see their money back. But there is also a trend of social enterprises that places impact ahead of profit. So consequently, there is often tension between investors who are more focused on long-term profitability. Like, I put this amount of money in, please. I have to feel like that money is coming back eventually. And entrepreneurs who say, well, it's not all about the money. It's also about changing the world. Hassan, what do you say to this situation?
I think you need money to change the world. So, it's easy to dream and easy to say we're going to do X amount of impact, but if you don't have any money to actually do anything with, you're not going to get very far. So I think I like investing in founders that have a great impact because their business is solving problems for people. But it's a business at the end of the day. And I think where there's issues and problems, there's an opportunity, and you can sort of fill that opportunity, make life better for people, but also while having a sustainable business that's able to generate revenues and profit and continue to survive and grow so that you can serve more and more people. I think the old-fashioned way of, let's raise money from grants and free money or whatever foreign aid money that's coming in. It's not sustainable. So you need to build a sustainable business that can grow and scale and have a positive impact on society as well. So I think that's the way I look at things.
Okay, and Chibuzo?
So before I answer, I'll caveat it to say socially profitable businesses can also be financially profitable. And I fully support that. However, for the purpose of the argument, I would say that having a big social impact dream attracts certain kind of people to your bandwidth, to your network, to your radius, from investors to employees to, for us as a company, one of the things that our longest employees who've worked with us are people who really buy into the impact, not necessarily, the reward or things like that. In fact, I personally find that when people buy into the impact, it's even more motivating than ESOP. And it's fascinating. And I think even when things are going bad, employees that have that social impact, they go with you the long route. I think social impact, we're living in a world where it's becoming increasingly clear to everybody that you need more bottom lines than just financial. You need social impact. We're talking about climate change. The only reason why people started paying attention to climate change was when somebody put a financial cost to it, right? But we need to tackle the world's biggest problems before we have an actual cost to them.
Hassan, how do you feel about tackling the problem before you see your millions back?
I think what Chibuzo was saying is correct. I think you really need to be motivated by a mission. Like, starting a startup is one of the hardest things that you can do. And if you're not motivated by a vision and a mission that's going to drive your success, you're not going to go anywhere. So I think you're right. Like, you need to make sure that you are driven to build something significant that's going to have a significant impact. Otherwise, like, the first couple of obstacles that come up, you're going to give up and be like, that's it. If you're purely financially motivated, that's exactly what's going to happen. So, like, what I invest in is I invest in people, right? So we're investing in great founders that really believe in what they're doing, but on top of that have the ability to execute. They have the ability to get things done. So when I'm looking at an investment, I'm looking for both factors. I'm looking for this drive, this determination, this passion, but also the ability to execute. Because sometimes you have dreamers that are out there and like, we're going to have X amount of impact, but then you drill down and they just don't have the ability to execute or get anything done. Yeah. So the financial part of it helps, show that here's the real impact, here's what we're able to do, here's how we can be self-sustaining. So that's a big part of it. But I agree with you on the missionary versus mercenary thing, because actually that's how I build my team as well. I look for people that believe in the mission of what we're doing, not just are there for the financial return and incentive.
You are agreeing with Chibuzo today. You must have cut him a check, bro.
Yeah.
During the lunch. But okay,
not yet.
Not yet. On a more serious note, have you ever encountered a situation where this is a social impact endeavor and you're walking away from it, or you're not considering it because you just don't understand or see or cannot visualize when you will make your profit?
No, not really. Most of the founders that come to us as a venture capitalists are sort of self-selected anyway. They know we need to build a business, and on top of that, we're building a business to solve X or Y problem. And that's usually where big problems lead to big outcomes. So we have founders that come to us and say, listen, this is the problem that we have. These are the people that are getting impacted. We will make money X, Y, Z. It will solve this problem for all these people. So there is definitely a great impact for what we're doing, but we're also going to make money. And so this is how we're going to scale and execute and build what we want to build. So,
which brings me to risk tolerance. Chibuzo, are investors intolerable when it comes to risk? Tell them as it is.
So I think the nature of the business as an entrepreneur is to have a large risk appetite. And I think for investors, I think as you move along the scale, you have different appetites. You're not going to expect a $1 trillion fund to be risking a lot compared to a venture capital fund who is targeting seed. So they have different appetites for risk. Having said that, I do think that it is important for people not to confuse their own view of the world, even though it is necessary for the thesis, both on the investor and the entrepreneur side, with what is actually happening. And it is important to take calculated risks. Standing in front of a tsunami and hoping that you will be fine is very different from riding in a tsunami in a capsule that, is protected. So I think the important thing is to take calculated risks and, align with people who also understand, because you also don't want, to be the only person. For us in drug stock, we always have one person who is conservative and we're having conversations because it's necessary to be grounded, right? But at the same time, if you don't step in front of or build that bull riding scenario, you're not going to, take advantage of a lot of opportunities.
So, Hassan, risk appetite or a greater risk appetite to have now in this kind of era or not to have?
No, for sure. I think the thing is, we only generate a return if we take a risk. There is no other option. Like, we've got to take a risk. But the thing is, you've got to take a calculated risk. And so that calculation is different for different kinds of investors. Late stage private equity guys are all about the numbers. They're like, we're going to invest in this company, we're going to grow it XYZ, we're going to fire so many people, and we're going to make money this way. That's not what I do. Look, we invest at the seed stage, really early on. So all I really have to go on is I need to back the right people. So I'm taking risks on individuals, on teams, and little signs of they're able to execute, they're able to do something, they have customers that are interested in it. But the way I can do it is because I understand risk in a different way. I'm not taking risk on an individual company, I'm taking a risk on a portfolio of companies. So the way that we invest is we're investing in 120 companies over 3 years. Out of those, I fully understand that 30% of them will fail. Nothing I do is going to fix that. Like, it's just the math. It's probability, it's risk, it's all of that. Risk is probability, by the way. It's all numbers and everything. So luck is numbers and probability as well. So the way that I look at it is 60% of investments will go to zero. I have to be very comfortable with that. 20% of my investments will give me back my money, which is not really very great. So 80% of my investments aren't going to generate an outcome. Out of that, we then see probably 10 to 13% of the time we'll see a return of 5x, which is good, but not great for our industry as VC. We'll see about 5 to 7% of the time we'll see a return of 20x. And only 1 or 2% of the time will we ever see these great outliers, like the Ubers or whatever, that'll generate a 40 times return on our investment or more. So I'm very comfortable with those numbers. So I will go into a deal and I'll be like, look, if I put $100,000 or $500,000 into your deal, it could go to zero, but it could also go up to $50, $100 million. So it's fine to take the risk on the downside when you have calculated it correctly.
Yeah. Chibuzo, I give you the last word. What you wish you had known before you approached your first VC?
Oh. What do I wish I had known? You need the right team, lawyers. You need the right
guidance.
Guidance. It's important on both sides. You need also to understand the instruments. We got really early and didn't understand it. Luckily, we weren't burned. Our investors weren't burned, so things turned out fine. But just looking back, a lot of the painful conversations that we had could have been avoided if some of the things we didn't even know, for instance, what, cap tables meant before we started taking money.
You're like, huh?
Seriously.
All right, ladies and gentlemen, that's all we have time for. Please give a round of applause to Hassan and Chibuzo.